Hello everyone, welcome back to this week's Technical Insights. Global stock markets endured another volatile week as Donald Trump announced a 90-day pause on his reciprocal tariff last Wednesday that led to a historical gain. The Dow Jones Industrial Average advanced 619 points or 1.56% last Friday to close at 40,212 points. S&P 500 gained 95 points or 1.81% to end at 5,363 points. The Nasdaq Composite rose 337 points or 2.06% to finish at 16,724 points. Last Wednesday, Donald Trump announced the 90-day tariff on the tariffs, and the Dow jumped more than 8% and the S&P rebounded 9.5%, while the Nasdaq rallied 12%. Investors welcomed the pause as a sign that the Trump administration is willing to negotiate a trade deal and roll back some of the tariffs that were implemented previously. On Thursday, we also saw the US Consumer Price Index ease more than expected in March, as US prepared to launch the tariff war last month. The CPI index fell a seasonally adjusted 0.1% in March, putting the 12-month inflation rate at 2.4% versus the 2.6% market estimates, and down from the 2.8% in February. The core inflation reading came in at 2.8%, lower than market expectation of 3%, having increased only 0.1% for the month. This was the lowest rate for the core inflation reading since the March of 2021. The drop in energy prices helped keep inflation in check, as a 6.3% drop in gasoline prices helped drive a 2.4% broader decline in the energy index. And on Friday, we kick off the Q1 earnings seasons with US banks like JP Morgan, Morgan Stanley, and Wells Fargo all reported improved Q1 earnings, topping Wall Street estimates. Wells Fargo revenue slightly lagged the analyst consensus, and the bank stock closed 1% lower. JP Morgan was 4% higher, and Morgan Stanley was up over 1% on Friday. Donald Trump then mentioned that he is optimistic about a trade deal with China and made it clear that he is open to a deal, ending the week on a positive note. For the trading week, the 30 stocks Dow Jones Index added 4.95% for its first positive week in 3. Broad Index S&P 500 gained 5.7% for the best week since November 2023. And tech-heavy Nasdaq Composite Index advanced 7.29%, its best performance since November 2022. In Asia, Beijing raised its tariff for US goods to 125%, countering Washington overnight move to hike duties on Chinese imports to 145%. Even though Donald Trump paused most of his reciprocal tariff on Wednesday, he singled out China with an additional 50% duties to 145%. China on Friday retaliated by raising its levy on US products to 125% from 84%. The Chinese ministry then issued a statement that even if US continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of world economy. China will no longer entertain or retaliate, as there's no point in doing so. The Hang Seng Index rose 1.13% or 232 points to end last Friday's session at 20,914 points. The Hang Seng Tech Index climbed 1.8% or 86 points to 4,900 points. The gains that we see last Friday, both on the Hong Kong markets and the mainland markets, helped to recover some ground from a heavy sell-off earlier in the week. The recovery in Hong Kong indices was followed by a move in mainland A shares that was widely believed to involve buying by Chinese state-owned funds. Beijing has stepped up efforts to stabilize the mainland markets last week, with a state fund and state-holding companies stepping into the market to buy stocks, and a slew of listed companies have also announced share buyback. Despite the gains on Friday, the Hang Seng Index still suffered a weekly loss of 8.47%, the biggest loss since February 2018. And the Hang Seng Tech Index also fell 7.77% for the trading week, posting its fifth weekly decline and the biggest weekly retreat in months. Back to Singapore, our local market closed the week in the red after dropping a staggering 7.46% on Monday. The STI Index lost 65 points on Friday, or 1.83%, to end the week at 3,512 points as the US and China trade war intensified. This is the second consecutive losing week for the STI Index and one of the biggest drops that we see in the past few months. Our three local banks were also the biggest loser on Friday. DBS lost $1.54 or 3.88% to close at $38.13. OCBC fell 42 cents or 2.72% to finish at $15.01. while UOB dropped 74 cents or 2.23% to end at $32.47. Top gainer on the STI last Friday were Yangzijiang Shipbuilding up 2.58% and Sembcorp Industry up 1.47%. SGX was also up 1.12%. In corporate news, we saw Taka Corporation up 2.5% after its associated company, Gem Life, received approval to build an over 50s lifestyle resort in Queensland, Australia for Aussie $428 million. SATS shares were also down by nearly 2% on Friday close after it announced its units, SAT Cruise Services, will lead an expansion of the Marina Bay Cruise Centre in Singapore. ST Engineering shares were also up nearly 1% after it said its urban solution business was awarded a turnkey rail service contract for a new Taichung MRT Blue Line worth dollars 1.4 billion by the Rapid Transit System Bureau of Taichung City Government in Taiwan. As the turmoil continues, we may see an uptick in trading activities. So for this week's technical analysis, let's look at SGX. Last Friday, SGX share price rose 14 cents or 1.12% to close at $12.63, making it one of the top 3 gainers in the STI index. For the trading week, we can see that SGX share price fell 2.53% after suffering a 9.45% drop last Monday. From the chart, we can see that SGX share price was largely flat in the first half of 2024 and started to break up into an uptrend in the second half of the year. SGX share price then hit a year-to-date high of $14.04 on 10th of February in the previous month and retreated into a downtrend as the global trade war intensified. Last Tuesday, SGX shares tested the red line over here, which is the long-term 200 days moving average, now at $11.71, and staged a credible rebound, indicating that there's strong buying support around this price level. SGX share price then rebounded back to the 20 days moving average, which is the white line that you see here, but was not able to close above this level at $12.88 for the week. And then share price did a slight pullback to settle around the 100 days moving average, which is the amber line, at $12.70. The immediate support for SGX share price is now at the lower bound of the Bollinger Band at $11.99, with the 200-day moving average nearby at $11.71. Key resistance level will be the 50 days moving average at $12.99, which is the blue line that you see here. And above this level, it will be the upper bound of the Bollinger Band at $13.76. Looking at the indicators, we can see that the MACD indicator is still having a negative reading, indicating the presence of downside momentum. But in the last 2 trading sessions, the downtrend momentum is starting to show signs of subsiding. The latest RSI reading on Friday at 47 points is also 3 points away from the 50-point neutral mark, signaling that the rebound that we see last week is still weak, at least until we cross above the 50-point neutral mark reading on the RSI indicator. So with the MACD indicator still showing the presence of downside momentum and the RSI still below the 50-point neutral reading, investors can still be a bit patient to accumulate SGX shares near the support level of $11.99 or the $11.71 level. The near-term target for SGX will be the 50 days moving average at $12.99 before testing the upper bound of the Bollinger Band at $13.76. On the longer term, 15 analysts covering SGX have 3 strong buy calls, 4 buy calls, 6 hold calls, and 2 sell calls. The 12-month average target price is $13.12, with the maximum estimate at $15.07 and a minimum estimate at $10.30. And these are the updates that I have for you this week. If you find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.